Hey traders, welcome back to this week's weekly Forex forecast. We are now into February. January 2025 has come to an end, and it was a very stop-start month, wasn't it? Because we had a ton of bank holidays kind of breaking up trading weeks, and then we had news events like interest rate decisions coming out, and it was a very stop-start month. However, we did finish the month at fresh all-time highs in the GMT members area with the real-time setups, and I was personally 4 green weeks for 4 this month. I don't win every single week, and I didn't actually trade the second month of January. I can't remember why. For the first week since the inception of GMT, I didn't take any setups in the second week of January. It was around the time we were getting bank holidays and everything else, and there wasn't anything that really set up that I wanted to pull the trigger on. So coming into a brand new month, and we are going to start to see, although we do have an interest rate decision this week in the UK, we are going to start to see, those events coming to an end and the back end of those, and we can really get stuck into some kind of more flowing markets, I think, in February. So starting with the dollar, interestingly, you can see we did have the up week last week in the US dollar, and we're currently sitting at the major high, the breakout high here of the 107.35, and we've pulled back and now we've stair-stepped it and retested it. So I would not be surprised to see the dollar starting over the next couple of weeks to make its way higher, at least, let's say over the course of this month, February. And I do think we have a very good shot at making the prior high of the 115. And this is really, I know Trump wants to push the dollar down, but think about this, it's not 2016 anymore. As he starts to impose tariffs and this is inflationary, this is going to exacerbate an already inflationary scenario that wasn't there in 2016. So I do think this time Trump will have a more difficult job of pushing the US dollar down if he's going to impose tariffs and everything else, which he is. And actually, Canadian dollar shorts are one of the top themes we'll be looking at in today's video for this coming week. Okay, so kicking off with the portfolio selection, as we always do before moving on to the pairs, looking for the best 3 currencies really to the upside and the best 3 currencies to the downside individually, so we can go and pair them off next week. And I do think to the short side, this is pretty easy going into next week. The Aussie is my number 1 short theme, the Swiss franc is my number 2 short theme, and the Canadian dollar is my number 3 short theme. I especially like the Canadian dollar because even though it's not as weak in the performance metrics here as Aussie and Swiss franc, we did have an interest rate decision last week out of Canada. They did cut. They did mention the fact that going forwards, they were revising growth forecasts down, and that the tariffs from Trump, which are just coming in now, are going to have an effect, a negative effect on the Canadian economy. So that means interest rates, will have to fall, relatively speaking. So I do like CAD shorts, definitely going into next week, one of the top things I'm going to be looking at. To the long side, we need a little bit more nuance next week because the pound, the euro, and the yen are my top 3. In any normal week, that's what I'd be looking at. However, we have an interest rate decision on Thursday out of the Bank of England. They're expected to cut rates, and so I'm not against buying the pound, against the Aussie, the Swiss franc, or the CAD Monday to Thursday and being out of it, by the interest rate decision. However, if you get involved, maybe it gets a bit later on in the week and then you end up stuck in it, for the interest rate decision. They cut rates, it moves against you, you kind of risk manage it or you take a slightly bigger loss. So for that reason, we're going to leave the pound this week. We'll maybe revisit it next week, see what the Bank of England say. So to the long side, I'm going to be looking at the euro as the number 1 long theme, followed by the Japanese yen. Of course, we had the rate hike recently. And also the US dollar as number 3 long theme going into next week. So we're going to be looking at EurAusd to the upside, EurFranc to the upside, EurCad to the upside. We'll also look at Aussie yen to the downside, Franc yen to the downside, and CAD yen to the downside. And we'll also look at Aussie dollar to the downside. We're going to look at US dollar franc and US dollar CAD to the upside in today's video. And we'll also look at Euro dollar, which I look at every single week because many of you like it, before wrapping up, as always, with gold and silver. Kicking off the watch list, as we always do, with crude oil. And crude oil is not one of my favorite markets going into next week. On balance, I would be looking for shorts. I cannot be a buyer of this market. We actually bounced at the weekly lower bound. This reversal came right from the weekly lower bound last week. And I'd like to see this make its way all the way to the upper bound at the 76.81. This is right at this kind of failed double top. We'd be trading into the low and we'd be breaching if we do the 76.81, entering into the sell zone. This would be a good place to start to look for 1 or 2 day reversal to the downside. Again, this is not top of my list. I much prefer the Forex pairs that we're looking at in today's video over crude oil. If we blast above here and we take out the 79.82, we'll probably also take out the high. What does that mean? It means this is a resumption of the trend because we're making a new high. Now, if we do that initially, I'm not going to step in and sell this, right? Because we break through here and we take out this high. Yes, we've taken out the high, but we've kickstarted the new trend, or we've resumed the trend. So it's not an ideal scenario. This would only really be, if I was already short and I was trying to risk manage it, this would be the second place I'd be looking for a 1 or 2 day reversal. The third thing you can look for is a breakout to the downside, pulls back, a faster market breaks down, moving average follows it, and you get that bear flag set up, in this case down to the 70.80. Again, we cover crude oil every single week, and again, you can see breaks up, in this case to the upside, hugs it, moves away. We cover crude oil every single week, so that's what I'm looking at in crude oil, but very lightly. I much prefer Forex opportunities over crude oil commodity opportunities next week. Okay, so kicking off the Forex markets with Euro Aussies. We're going to start with the Aussie short theme because those short themes to me stand out more than the long themes. I think the short side is actually better next week. But of course, Aussie shorts in this case are Euro Aussie to the upside. So I can only be a buyer of Euro Aussie next week. I cannot sell this market under any circumstance. If Euro Aussie pulls back, and we start to see this correcting towards the 1.65247. This, for those of you watching this video for the first time, this is the first weekly upper bound and the first weekly lower bound. And in gold, we have the second weekly upper bound and the second weekly lower bound. So we essentially just have two ranges here. And between these ranges, we have the sell zone and we have the buy zone. Very, very simple. What it means is when we enter this buy zone during the week, the odds of snapping back inside this blue range increase significantly. So what I'm primarily looking for, and these are the exact setups I'm doing in real time with GMT members, is when we start to enter, in this case in the buy zone, and don't forget, our portfolio selection comes first. We overlay this onto the portfolio selection, which means that if we enter the buy zone here, we already know we're looking at a market that we have a predisposition to the long side, right? Because the euro, we're looking at outperforming the Aussie generally. And then, with these ranges, we're basically timing that portfolio selection. So if we start to breach and everything's reactive, I don't know if EurAussie is going to take out its lower bound into the buy zone next week, but if it does, we've made a plan and I'm ready, right, to act on that reactively. It's not about predicting the future. It's about making a plan, waiting to see what happens, and then once you start to see the setups appearing, then pulling the trigger on them. So I do like Euro Aussie below the 1.65247 primarily. This is where the odds increase. And once we enter this, I'm starting to look left. Here is a low right on the level, but here's another support. Here's another support. So this kind of area here, you could almost just box this off and make a mental note of this kind of area. Okay, so once we start to enter this, I'm going to be looking to the left, especially if we break through here and we start to take out these lows. That's going to be great, preferably this low because it's the last one here, it's further down. So if we pull into this buy zone and we start to test this low, this is where I'm going to be looking for sellers to get trapped, because what happens is there's people shorting this. Maybe they're zoomed in on a 5-minute time frame, they're not paying attention to the bigger picture. Maybe they don't have portfolio selection, which honestly is most new traders don't have any portfolio selection. They try and choose markets to trade through technical analysis patterns, when it should be the other way around. You should already have a portfolio selection process and then you overlay technical analysis for timing. Technical analysis is a timing tool. It's not a portfolio selection tool. That's a big mistake a lot of new traders make. But anyway, the point is that if we come down and we take this out and we start trading to this, what I'm going to be looking for is I'm going to be looking for sellers to get trapped below this low. So people are shorting, and then what you see is you start to see momentum fading. You see, the sellers struggling, perhaps at this low over here in the buy zone. And then what happens is it reaches a point where enough sellers realize they're making a mistake, that this market is not going to go down. They pull their positions and you get a really nice liquidation in the other direction. And that is the primary opportunity that really I'm looking at. And again, that we look at every single week with GMT members in real time. So that's what I'm going to be looking for. The second thing is if we break through here and I get involved, especially if I get involved here and it starts to move against me, because once we take out this gold level, and we're usually only going to take this out 10% of the time per asset, most of the time it doesn't happen, so we're not expecting it to happen. But as a backup plan, if we take out the 1.6368, this would be the second place I'd be looking for a long position. If I'm already long, I'd be cost averaging it. And as it bounces, I'm exiting this for a small loss or a break even. And If I'm not already involved for a long position, so it blasts straight through, and maybe I just say, that's a bit quick. Maybe we'll leave this. You know, we've taken this out pretty sharply, we've got momentum, and we end up hitting the second one, which again, doesn't rarely happens, but if it does, it's a very good initial position because your odds of reversing back inside the gold range, if you breach it, is very, very high, close to 90%. Over 90% even, it's actually 95% theoretically. You can change that up and down based on portfolio selection and everything else, but those are the prevailing market odds. So the third and final thing you can look at as well is, because I'm only looking to be long, if we start, we're already down below the 20 moving average here. If we start to break above, that's where you get your intra-week bull flags. In the 4 hours, you usually get one. Usually one. And it's that first pullback into the moving average, and then once you enter the sell zone, because it's up here, this is a great profit-taking target for any longs. I'm not going to be shorting the market here, but any intra-week longs, this is a great place to book profits above the 1.6837. Next is Euro Franc. Again, I can either be a buyer of this market or do nothing. Cannot sell this market next week. The lower bound in Euro Franc sits at the 0.9377. I'm not a big fan of diagonal trend lines, but just eyeing this off, if you just attached one to these lows over here, you'd probably be in this kind of area. But if you did, so it's just some confluence you could look at. But again, I really only use horizontal levels. Down to the 0.9377 next week is where I'm going to be looking for Euro Franc to come. And if we start to enter this area down here, the buy zone, there is a really nice low. Again, like I said, I think it was last week's video, you know, once you start to go past halfway, you should probably expect this to start to, you know, take out this lower bound. So usually I'm looking at lows, you know, on the left-hand side here, somewhere in the first half, really, of the buy zone. So this would be a great one. So if we come down, we take out this low, I'm going to be looking for sellers to get trapped, pull their positions, and that's the 1 or 2 day reversal, and that's what we're looking at here if you want to quantify it, capturing 1 to 2 days worth of movement out of 5, you know, 5 trading days for the week. So that's what I'm going to be looking at there. As a backup plan, this is not a primary setup, this is a secondary setup, but if it comes all the way through and it takes out the 0.9313, this is the second place. I'll be looking for a 1 or 2 day reversal, whether I'm long already over here and just risk managing it or not as initial position. And the third and final thing, like with EurAusd, if you get a fast market, so it starts to pull back, but instead of hitting the lower bound, it ends up breaking higher, right? So you get that momentum coming in, momentum. It then comes back, instead of dumping like this back over the moving average, you get a consolidation, kind of hugs it. And then you get the move away, so you get that bull flag set up. Anywhere above the 0.9505 is a good profit taking area, and especially as you've got a prior high in the sell zone, that would be a good profit target for next week in any intra-week longs. And third euro pair here we're going to look at is EurCad. We'll look at euro dollar as well, but we'll look at that later on with the dollar pairs. We did have this spike up in EurCad. This was a Canadian dollar sell-off, which actually I happened to catch. I was involved in Aussie CAD with the real-time setups in GMT members area, and it rallied while we were in it. And it was a really good trade, and I happened to be in front of the screen as it went. And I was quite surprised, but I knew pretty much straight away it was a news catalyst. Something had happened because, you know, you watch these markets long enough, you know when a news catalyst comes out. I mean, these markets aren't expected to move, you know, more than say 0. I think it was 4% in terms of Aussie CAD on the day, and it was up like 0.8, you know, or more. So we did get that. It reversed, you know, as often happens in Forex markets. That's why, you know, Forex markets, mean reversion strategies, I keep saying this to you guys, will outperform because that is a significant catalyst. And yet we reversed it, right? That happens all the time with currencies. You know, you get something like that in a small cap stock, that thing's going to explode, could be up to 300%, not in Forex. So we did see that, and we started to pull back. We kind of recovered that, took out the lows down here, and coming into this week, I can either be a buyer of this market or do nothing. Cannot sell this market. So I'd like to see EurCad come down, take out the 1.48969. There is a 4-hour low right here. So that's pretty good. This one's a bit further down. So this low right here, we enter the buy zone, we start to take this out and go and start looking for sellers. We also have a high here. So there's a kind of again, you could kind of box this off mentally. This is where I'll be looking primarily for, you know, sellers to get trapped, pull their positions for that 1 or 2 day liquidation that we often see. If we end up taking out the 1.47389, even though it's not expected, that is a kind of backup plan where if I'm long here, it moves against me, I would be looking down here for a 1 or 2 day reversal. And as it bounces, even if it pulls back, you know, 2/3 of the way, I usually just exit this for a small loss, except it hasn't worked, move on to the next trade. And the third and final thing you can look for is a fast market. You get the breakout intra-week instead of taking out the lower bound. You get that consolidation, that bull flag breaks above the moving average, hugs it. Right, that's the kind of thing. You see to the downside it works as well. Down, hugs it, moves away. You can look for that bull flag setup into, in this case, the upper bound at the 1.5213. Okay, so moving on to the yen pairs, starting with Aussie yen. I can either be a seller or do nothing. Buying this is not an option for me next week. We came into this correction to the downside, and it looks like it's now beginning to resolve itself to the downside as well. So what I'd like to see is Aussie yen pulling back, breaching the 97.94. There is a high right here where we attempt to close this gap, and there's another obvious one up here. So either of these two, but as soon as we take out this high, I'm going to begin to look. What are the buyers doing? Are the buyers running out of steam? Is this causing a pattern to develop, like a head and shoulders or a double top? And then I'm going to look for that liquidation for 1 or 2 days down. If we blast all the way through as a plan B, as a backup plan, above the 99.46, the odds increase even more for a reversal. And this is where I'm going to be looking also for a 1 or 2 day reversal to the downside, whether I'm short already with an initial position or not. And the third thing is you start to break up towards the upper bound, and then you get a re-break back down below the moving average. In this case, you get that pullback, hugs the moving average, and that move away, that bear flag set up down to profit taking target, the 94.91. Next is franc yen. Again, I can either be a seller or do nothing. Cannot buy this market next week. I would like to see franc yen pulling back. The upper bound sits at the 172.34. We have a high right here. We have high here, and we have a high here. So there, any kind of push into this area is going to see buyers running into a number of key areas of resistance in this sell zone. These are going to be great places to start to look. You know, again, do we get buyers running out of steam? Do we get patterns developing, looking for them to pull their positions for a 1 or 2 day reversal? If we blast through here, more of a backup plan, but if we take out the 174.36, this would be, as always, the second place. I'll be looking for a 1 or 2 day reversal. And the third and final thing is, if you like to trade breakouts, and the yen pairs are actually pretty good for breakouts because they're quite volatile compared to other currency pairs. But if you like that, during the week, you get a break back down below the moving average, and you can look for that pullback into it and then move away into the profit taking target here at the 168.29. And last but not least, in the yen pairs, we have CAD yen. Really like the CAD short theme next week, so this will be high up on my list. If we break through the moving average, that's what I want to see. Because that tells me we're now correcting. At the moment, it's trending down. You don't really want to jump in. You might say, well, if it's trending down, maybe you should get involved in the trend. True, but if the trend is, you know, kind of long in the tooth, you'd better to have a pullback first, right? You don't really want to be selling near the lows. So it starts to break above there. I would like to see it come all the way and take out the 108.53. We enter the sell zone. And again, there's a high here and also an obvious high here, especially if we break through and take out this high. That's going to be a great place to start to look for a failed breakout and look for bulls to pull their positions for a 1 or 2 day reversal. If we get all the way to the 110.23, we're probably going to take out this high if we do. And what does that mean? That means this whole thing here is a reversal, right? We went up, we came down, and we haven't really broken out here with any significance. And now we've made a new high. So again, abnormal momentum. That would be a big signal that this market has changed direction if we took out this level. It's not likely to happen. If it does, this would be the second place temporarily. I'd be looking for 1 or 2 day reversal. And the third and final thing is, as always, you break above the moving average and then re-break with momentum. That sets up that potential bear flag setup down to, in this case, the buy zone, which would be, if you're short, you're booking profits at the 105.14. Okay, so wrapping up the Forex universe with the US dollar pairs before we move on to gold and silver, starting with Aussie dollar. Now, what I'd like to see is, I'd like to see Aussie dollar pull back. And what's interesting about Aussie dollar, we have the upper bound right at this prior high. It's not quite head and shoulders, but it's kind of the same pattern. You usually see head and shoulders, you know, at the top of a move, reversal pattern. But this is a consolidation. But if we came up and we took this out, we have confluence. We've now got the 0.63008 as the upper bound. And at the same time, we're trading into this high over here as a kind of left shoulder. We also have a high here. I mean, this is going to be a really nice place to start to look. You know, are we running out of steam? Are the buyers about to pull their positions and liquidate? If they are, there's your 1 or 2 day reversal to the downside. If we blast through here and we take out the second upper bound at the 0.63907, what does this mean? You know, think about that. That's a pretty big reversal. And it means the dollar index has probably broken that stair step. You know, that major breakout of the 107 point something, I can't, 0.40, I think it was, we looked at the beginning of the video. If Aussie dollar takes out a second upper bound next week, it means the dollar's collapsed below that level. You know, it's a significant reversal. So it's not expected to happen, but if it does, That's the second place I'll be looking for 1 or 2 day reversal back inside the bigger range. And the third and final thing, which is probably more likely, is, then testing this, is that if you start to break above it, and then you get the momentum back in the direction of the trend, that first pullback is a great bear flag opportunity into the prior low and into the profit taking zone at 0.6121 next week in Aussie dollar. Next is US dollar Swiss franc. I can either be a buyer or do nothing. Cannot sell this market next week. And last week, if you want an idea of what we're really looking for when upper and lower bounds are tested, look at US dollar Swiss franc. Came down, tested its weekly lower bound, and look at this reversal. In fact, this is sharper than you would normally get. It's kind of a V-shape reversal. I like to see it kind of lacking momentum, making more attempts. But we got a V-shaped reversal from the weekly lower bound before FOMC, held its range before the interest rate decision. And this was actually a fantastic setup. I didn't pull the trigger on it. I left this one on the table. But that was a really nice example of something, especially putting those two things together, having the range, pre-interest rate decision, it tends to hold. So that was a good one from last week, even though I didn't catch it. And I miss trades all the time. I don't capture every single thing that moves. But this would have been a good one in hindsight. If we didn't have FOMC, I would have pulled the trigger on this to the long side. But coming into this week, I can still pull the trigger to the long side if we take out the lower bound again. So I'd like to see this come down, retest its lower bound once again at 0.9024. I wouldn't really like to see it take out this low, because if it does take out this low, what that actually means is we've got a new low and the trend continuation to the downside. So if it took out this low, I would consider still stepping in and buying it, if sellers get trapped. But ideally what you want to see is, if something's going up like this and you enter the buy zone, a prior low over here where it can bounce, or where it bounced in the past, that's pretty good. But here, this is the prior low. So I would still consider it. Depends on how stretched it was moving into this. But anywhere below 0.9024, what I'd like to see is it comes down and then it starts to lack momentum and then reverse. If we come all the way down to 0.89366, very unlikely, because we had this kind of reversal almost to the upside last week, so it'd be a kind of double reversal. But if we did, this would be the second place, just as a backup plan. I'd be looking for 1 or 2 day reversal, whether I'm long already or not. And the third and final thing is we're already above the moving average, but you can look for it to kind of chop, correct, and then that momentum break back above should be easy to spot. Pulls back, kind of hugs it in this area. Over here, pulls back into it, moves away. That's a fantastic bull flag opportunity right there. You can see breaks, pulls back, moves away. If you get that intra-week, that sets up your bull flag into the prior high, right into the sell zone. So that would be a fantastic profit-taking opportunity above the 0.9199. Next is US dollar CAD. I can either be a buyer or do nothing. Selling this market definitely is not an option for me, especially with Trump coming out, putting tariffs on the Canadian economy. We really only want to be looking to the long side. So what I would like to see personally is a pullback below the 1.4345. And look at this. Here's a support, here's a support, here's a support, here's a support. This is kind of, engulfed by these supports over here. But certainly all of these, there's fantastic opportunity down here in a market that should be going up, generally speaking. If we start to enter the buy zone and take out, a multitude of these lows, maybe we take this one out and then we hit this one, this is going to be a great place to start to look for a 1 or 2 day reversal next week. As a backup plan, if we take out the 1.4631, we also have a prior high here, so there's a nice stair step. That would be the second place, although if it got down here, something significant has happened. Again, the dollar has collapsed, and probably reversed direction. The third and final thing is we're already above the moving average, but you can look for it to kind of break down intra-week, correct, consolidate for a day or so, and then you get the bull flag set up, moving average follows it. You can look for that first move away into the sell zone, in this case above the 1.4710. Wrapping up the Forex universe with euro dollar then, because we look at this every single week. This is not a great market. It's okay. They're both kind of strong currencies. The euro is actually slightly outperforming in the hedge dash system, but it's kind of, I expect this market to range because of where we sit in the dollar index, right at the major breakout high, and we're just sitting at it. I don't really favor shorting the dollar, and so that would be buying euro dollar from the lower bound. So on balance, if the opportunity arises where we break the 1.0470, this would be above here. I would consider stepping in and shorting euro dollar from above the 1.0470 next week. Remember, if this breaks above its upper bound, then we're probably breaking above, upper and lower bounds in the other dollar pairs. So I'd rather short Aussie dollar. I would rather buy US dollar CAD. I'd rather buy US dollar franc than short euro dollar. Intra-week, probably best to leave this because when you get two strong currencies, they tend to chop. Not really conducive for breakout trading. You get involved in breakout, it fails. Breakout, it fails. So we also have non-farm payrolls. So, coming up on Friday. So, for me, this would be the primary opportunity I'd be looking for. If we do take out the 1.0579, that would be the second place I'd be looking for a sell opportunity. And again, breakout, I would leave that next week with the non-farm payrolls on Friday especially. And the fact that they're both strong, probably going to chop around next week, generally speaking. Wrapping up the video then with gold and silver as we always do, and gold actually is a pretty good setup to the upside. I do have a bullish bias in the dollar. Usually that means bearish bias in gold, bearish bias in silver because it acts as a headwind. However, I did mention previously, I think in last week's video, maybe the week before that, we're in this scenario where we can kind of see the dollar pushing higher against currencies and gold going up at the same time. So I would only be looking for long positions in gold once again. Any pullback into the 2736.81. There's a really nice low right here, prior high right here. This is a great zone to start to look once you enter the buy zone and you start to test these, this low and this high. This is a great area to start to look for momentum to fade, for sellers to start to pull their positions, and you get that 1 or 2 day reversal. Again, usually in that scenario, you don't come back more than halfway, between the ranges. If we break all the way down to the 2675.10, aside from the fact something very significant would have to have happened to liquidate gold like that, very unlikely that's going to happen. Do not expect it at all. But, always as a backup plan, that is the second place I would be interested in buying this, especially if I was already long and I just wanted to risk manage this for a break even or round about a break even. And the third and final thing is gold. This is something that would be better for a breakout trade, unlike, say, euro dollar. If you start to see this pulling back, breaks below its moving average, and then you get the re-break, moving average follows it, and that's where you get that bull flag set up into the upper bound. When you get the intra-week breakout, that's when you can test the upper bound in this case at the 2860.22. Anywhere above that, you start to run out of runway for the week, so it's a great profit-taking opportunity in the sell zone next week in gold. And finally, we have silver. On balance, I am slightly looking to the short side in silver if the opportunity arises. So that doesn't mean silver is going to go down necessarily, but if it pushes higher, I would consider fading it or looking for the reversal from above the 32.68. The problem I have with silver going into next week is the dollar is sitting right at that major breakout level. If it fails and it starts to sell off, you could see, that weakness could see some fairly volatile moves in, say, silver and gold to the upside. So I don't think silver shorts are the best opportunities. I would consider them if we get above the 32.68 and the dollar's actually holding, above that major breakout level, and in fact looking like it's going to start to bounce and push higher. Then I would consider a potential short in silver from above the 32.68 for 1 or 2 day reversal. If the dollar breaks through and it starts to liquidate back down below and it fails below the major breakout level of the 107.41 or whatever it was, then, and you start to see silver pushing out above the 32.68, then I would not be looking to short it. I would just leave it, in that scenario. So if we do blast through and we end up at the 34.05, whether I'm short already, risk managing it or not, that would be the second place I'd be looking for a reversal. And in terms of an intra-week breakout, probably wouldn't bother with silver with the intra-week breakout. I much prefer next week to buy gold than short silver. But if you are involved in that and we get down below the 29.95, we're entering the buy zone in silver. Great profit taking opportunity for anyone who was to catch an intra-week move down in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.